Silvergate, Silicon Valley Bank, and now Signature Bank. As the US has tried to head off a bank run, crypto is quickly running out of places to bank with. Questions are also growing about USDC despite Circle restoring its stablecoin to parity, and what could all of this mean is to come from US regulators. Crypto's future looks as uncertain as it ever has done. It has been a potentially historic weekend for the US financial system and for crypto. The US Treasury Department, Federal Reserve, and Federal Deposit Insurance Corporation has banded together to provide a backstop for American banks. That follows the failure of Silicon Valley Bank, or SVB, a regional lender in California, after a run on deposits. SVB had a number of crypto startups and venture capitalists as customers. US regulators on Sunday also announced another hugely significant crypto lender, Signature Bank, was being shut down. Authorities have guaranteed deposits at the two banks, but not shareholders nor management of the banks. In essence, anyone with money at SVB or Signature has been told that they will get their money back. Some have speculated that bank failures could be the result of crypto contagion, but others have claimed the moves don't appear to be directly linked with cryptocurrencies. Winston Cao from Taipei-based exchange XREX in a Facebook post said, quote, "Crypto firms are actually victims, just like many corporates and individuals that deposited at the two banks." Markets have responded positively to Sunday's action from US regulators. Bitcoin rallied almost 9% in the 24 hours to noon on Monday in Hong Kong, around $22,500 US. Ethereum was up slightly less, just over 8% higher at $1,600. Cardano was also among those gaining strongly, adding 10.5%, worth 34 cents. Stablecoins have been in focus meanwhile, as Circle's USDC returned to parity against the dollar. USDC had fallen over the weekend amid worries about its reserves. Some $3.3 billion of Circle's roughly $40 billion backing the stablecoin were held at SVB. In a statement dated Sunday, Circle said those reserves would be fully available as of Monday in the US. It added that USDC would remain exchangeable with the US dollar at a 1-to-1 rate. Circle CEO Jeremy Allaire said, quote, "Trust, safety, and one-to-one redeemability of all USDC in circulation is of paramount importance to Circle, even in the face of bank contagion affecting crypto markets." Now, this has again raised the issue of counterparty risk for stablecoins, less than a year after the Terra Luna crash. For some in crypto, while transparency was an important element of Circle's response to SVB's collapse, fundamental issues remain. Alessio Coilini from Hextrust told the Daily Forkast that Circle had mitigated risk, but not eliminated it completely.
We need to rethink about stablecoins and whether there could be other solutions that could be more stable and offer less counterparty, expose to less counterparty risk.
The more pressing problem for crypto now, though, is where and how it uses banks. The closure of SVB and Signature comes less than a week after Silvergate Capital announced it was liquidating. Check out our video on that last week. While there are other methods for storing assets, the exchange networks run by Silvergate and Signature in particular were crucial parts of the crypto ecosystem. Speaking to Reuters last week, Ram Alawalia, CEO of Lameda Wealth, said the closure of the Silvergate exchange network in particular was significant, calling it, quote, "a strategic loss of critical infrastructure for crypto." Andrew Sullivan from AsianMarketSense.com said that the closure of Signature Bank's crypto-to-fiat exchange means some in the US would now need to look offshore for the service.
That, for the US, creates a problem, because one of the things it's been trying to be doing over the last 6-9 months to a year, again, has been one of the founders of this, is trying to make sure that stays onshore, stays regulated in a way that the US can really guarantee investor security.
Now, some have speculated this could further set back institutional interaction with crypto. That's both in terms of support for the sector from TradeFi and exposure to its assets. As Saxo Bank wrote last week in response to Silvergate's liquidation, quote, "This may cause banks to be more cautious and less willing to offer services if it relates to crypto at all, effectively harming the industry's ability to receive a bank account and limiting innovation in the space."
Banks are going to have to take another look at this as to whether they want to support it, or whether they're just going to say this isn't something for them. But I think increasingly, in the fact that even after the blow up of FTX, we didn't see Bitcoin go to zero, means that I think a lot of the banks are going to say, okay, this is an institutional field that it's worth us getting involved in.
Now, the US is still appearing to waver over new rules for crypto, ones that could potentially govern exactly this sort of situation. We know that a number of bills for new rules are currently being considered by Congress, but other agencies are still trying to enforce existing ones. There is a tug of war still going on and updated last week between the US commodities and futures regulators, and there are questions about how these new developments may impact all of it. Others, however, are not looking at this as necessarily a crisis of crypto, but rather solely as a crisis of banking.
People are starting to realize that there is an alternative, that there is only one asset in today's world that doesn't have any counterparty risk, right? And that is Bitcoin or other similar cryptocurrencies.
Now, all of this too has the potential to derail plans for the US and global economies, in particular as we recover from high inflation. Goldman Sachs have updated their expectations for the US Fed to leave interest rates unchanged at their next meeting. Just a week ago, most had predicted a 50 basis point hike. With inflation numbers out of the US due on Tuesday, crypto and markets more generally could yet be in for even more uncertainty. All right, that's it from us. Do like and subscribe to this video if you want to see more content like it, and please let us know what you think about what's going on right now in crypto and in banking down in the comments below or wherever you're watching this video.